All right, before we jump in, just a quick reminder, this is all for educational purposes. It's not financial advice. You've always got to do your own research before making any decisions. Cool? Let's go. Have you ever stared at a stock chart and it just looked like a bunch of random, chaotic squiggles? Well, you're not alone. But today, we're going to pull back the curtain and show you how to read the story that the market is actually telling. Let's dive in. So here's our game plan. First, we'll nail down the difference between trading and investing. Then, we'll learn the basic language of charts. After that, we'll get into the market's floor and ceiling. I'll give you a practice checklist, and finally, we'll talk about the big mistakes to avoid. First up, let's get one thing straight. You hear people use trading and investing like they're the same thing? They're not, at all. They're two completely different sports. Here's the core of it. Investing is a marathon. It's about time in the market, letting your money grow over years and years. Trading, on the other hand, that's a sprint. It's all about timing the market to try and profit from price moves that are happening right now or in the next few days. So how do traders try to time the market? Well, their main tool is something called technical analysis. It's basically the art of looking at past prices on a chart to get clues about where the price might be heading next. And that's exactly what we're going to be digging into today. So, how do you learn to time the market? You have to learn its language, and that's what charts are. At first glance, yeah, it looks totally foreign. But once you learn the alphabet and a few key phrases, you can start to piece together the story. This quote from trader Ross Cameron just nails it. He calls technical analysis a universal language, and it's so true. Once you learn how to read a chart, you can take that skill anywhere. Stocks, crypto, commodities, you name it. Okay, let's learn our ABCs. This is a candlestick. It's the basic building block of most charts, and it packs in so much information. It's not just a dot on a line chart, it tells you the whole story of a time period, where the price opened, where it closed, and it even shows you the entire battle between the buyers and sellers with its high and low points. Now, when you string these candlesticks together, they form patterns, like words. Take the hammer on the left. When you see this after a price drop, it often means buyers stepped in and fought back hard. It's a clue that we might have hit a bottom. And the shooting star on the right? It's the opposite story. After a nice run-up, it suggests sellers took over, hinting that the party might be over. All right, let's talk about one of the most powerful and honestly one of the simplest ideas in all of charting. We're talking about the invisible floors and ceilings that price seems to bounce off of time and time again. Let's start with support. Just think of it as a price zone where, historically, buyers have shown up with their wallets open. It's a level that has a history of stopping the price from falling any lower. It's like a safety net. And this chart shows it in action perfectly. See how the price comes down to that lower line? That's our support. And then, boing, it bounces right off. And then look up top. See how it hits that upper line and struggles to get through? That's resistance. It's the opposite of support, a level where sellers tend to show up. Honestly, the easiest way to burn this into your brain is to just think of it like this. Support is a floor that the price has trouble falling through. Resistance is a ceiling that the price has trouble breaking through. The price is literally bouncing between the floor and the ceiling. Okay, so now we have some basic concepts down. But just knowing this stuff isn't enough. The single biggest mistake beginners make is just jumping into the market without any kind of plan. So think of this checklist as your pre-flight safety check. Before you ever place a trade, even a practice one, you absolutely must have an answer for these 4 questions. 1, why are you even considering this? What's your thesis? 2, where exactly are you going to get in? 3, and this one is the most important, where will you get out if you're wrong? That's your stop loss. And 4, where will you cash in if you're right? That's your target. Learning what not to do can be just as important as learning what to do. So let's talk about the classic mistakes that almost every new trader makes. So, I've got a question for you. What do you think is the single biggest, most expensive mistake that beginners make? Well, it's not just one thing. It's more like a chain reaction of bad habits. And here they are. It all starts with having no plan, which of course leads to not using a stop loss. And that is how a small, manageable loss turns into a complete disaster. Add in blindly following the crowd and just not doing your homework, well, you see the problem. If you can just avoid these 5 things, you are way ahead of the curve. So, what's the best way to practice all this? Simple. Use a free stock market simulator, also known as paper trading. Pretty much every major brokerage or financial website has one. It lets you test everything we've talked about using fake money, so you can learn without risking a single real dollar. It's a total game changer. So we've just learned the basics of a whole new language today. We learn the letters, some key words, and even a little grammar. So the real question is, what story will the charts start to tell you? And that's our crash course on how to read charts. But hey, remember, this is just step one. The journey is all about practice and staying curious. Thanks for hanging out with me today.